If this conversation hits home for you, the best way to support the show is to follow, share, and leave a quick review. I really appreciate you guys so much. On to the episode.
Everyone has a great idea, everyone. But if you have the team to execute on that idea.
Welcome to another incredible episode of Purpose Driven Progress. As always, I'm your host, Jacob Hicks. And today, guys, we've got a really fun one, I got to tell you. So my guest is a national champion quarterback and is a startup founder. So Kati Findling's journey is anything but ordinary. With roots in a small town, Missouri town, and a deep passion for local community and entrepreneurship, she's carved out a career in marketing, VC, and building businesses with heart, like a subscription coffee app that supports local shops. Kati, welcome to the show.
Hey, thanks, Jacob. I'm excited to be here.
Yeah, really happy to have you. So that's a lot to unpack. So let's kind of start at the beginning here. So, how did you get to where you are? You kind of started with a national championship work, right?
Yeah. Where do I begin? So yes, fun fact, by the way, I won a national championship playing starting quarterback and starting cornerback, by the way.
All right.
So two national championships. And the reason I'm going to brag about it is because I put in a lot of effort and work. And so I earned both of those.
Absolutely.
But yeah, so I'm in venture capital right now. I've been in the space in venture capital for the last 3 years. I am the vice president of a dual-use defense-focused venture capital firm. So we're focused on AI, cybersecurity, robotics, quantum, deep tech, healthcare, health tech. So it's fun. I love supporting national security. It's very impact-driven for me, and I'm a very impact-driven person. So that is my full-time job. But as you know, we all do multiple things.
Yes,
and so I also am a managing partner at a new stealth, so I can't talk too much about it, but essentially it's called Digital Athlete, and essentially it's basically digitized trading cards for athletes. Yeah, so that's new endeavor for me, venture partner for a couple of VC firms, but long end of it is I got into venture capital because I was a startup founder myself. I was a doer. It all started actually back in Missouri growing up when I was a kid. I think I mentioned this when we initially talked, that I have a cool story for you. But
yeah.
When I was a kid, I was very entrepreneurial. And so I was the kid, kind of like Gary Vaynerchuk. I would take toys and I would go and I would set up on our lawn, and I would get all the neighborhood kids involved, and I would set up this stand and I would get them to sell their toys, and then I would take the money. So
love it.
And I actually have a picture of it somewhere in my stuff, but I was very entrepreneurial like that. And then also back then when McDonald's Happy Meal toys were like legit. I got a Happy Meal toy. It was a cat. You'd pull down its tail and then its eyes would blink. So back in that day, I was a rollerblader. And so out of that one toy, I created rollerblade blinkers, so like turning signals. Right. So that's where my entrepreneurial journey started, I guess. But as I got older, I went on to play college softball, and then I played women's professional football that you mentioned.
Yep.
Which led me into I moved to Austin, Texas, where it's very entrepreneurial. And there I had this brilliant idea about an app supporting local coffee shops. And I love coffee, and good coffee at that. And as you know, Starbucks and Dunkin' are everywhere, but I really love supporting local coffee shops. And so I was like, how do we support local? And anyways, I created this idea. It's called My Coffee Pass, and I worked on it for 3 years. And essentially it was the Starbucks app, but for local coffee shops. So it was a marketing platform. It was a B2B, B2C platform. So for the coffee shop, it was a marketing platform. So it was great, worked on it, raised money for it. So I worked on it for 3 years, raised money for it, launched the first version of the app in December of 2019. As we all know, COVID happens 3 months later, and unfortunately half my coffee shop partners had to shut down. So I learned a lot going through the grind, and it's led me to where I am now. Like, I'm so grateful for that journey. Unfortunately, losing other people's money is not fun, and launching a startup and it be horrible timing is not fun. But you got to look at the positives and from that experience, I've been able to venture into the venture capital space, as I call the dark side, and I love it. So here we
Uh,
are.
that's awesome. I love it too. I gotta tell you, that's a super fun story. Particularly talking about winning two national championships at quarterback and cornerback, right?
Yeah, totally.
But
Two different
for
positions.
Can you, for those who may not know, I mean, I feel like if you're in the business space, you have some idea what VC, what venture capital is. But can you like break it down a little bit more basically for us? Like, what is VC? What is a venture capitalist? And like,
Yeah.
how do you go through like the evaluation process when you're thinking about, maybe investing one way or the other?
Yeah, good question. So in layman's terms, how I always describe it when people are like, when they look blankly at me when I say I'm in venture capital,
Yeah.
they look blankly at me and I'm like Shark Tank, right? So they're venture capitalists. So essentially, I mean, there's two sides to it. So I, by the way, am on the fundraising side. So my job is we're actively fundraising for our fifth fund. We've been around for 14 years. And my job is to meet with institutional investors. So your family offices, your fund of funds, RIAs, you name it. And I fundraise from them. And then meeting like high net worth individuals. But so that's the side that I live on. But I also, because we're a smaller team, I help on the deal sourcing team. So
Okay.
because of my founder background, I relate really well to the founders. And jumping into your question as to like what venture capital is. So we are basically the early stage of companies that are looking to get off the ground. We are the second, I would say the second investors in. I would say the first investors in are your angel investors. So those
Yeah.
are usually like they've been successful either at like your Googles, your Facebooks, and then they just kind of like want to invest on the side and they don't want to be a part of a fund. They usually write smaller checks. I would say they're writing anywhere from like $10,000 to $100,000 checks. Venture capital is more of your varsity, I would say, investor. So we come in, and depending on what stage, right, each venture capital group is different. So we initially, our first three funds were geared towards early stage investments, so pre-seed to Series A. Pre-seed obviously means that they are pretty much pre-revenue. And at that stage, right, you're really banking on the founder. So for me, for example, when I was a founder myself, I raised money from angel investors, but they were investing in a pre-seed company, meaning I had no revenue yet. I had this idea, and they invested in me as a person. So they got to know me, Katie, and that's why they invested. And I mean, it's similar to venture capital. Again, it depends on the group. I'm not going to speak for every VC group out there, but for us, for example, it comes down to the founder. When I look at the companies in our portfolio over the last 14 years that went to zero, it's always come down to the founder, not the solution, right? Everyone has a great idea, everyone. But it's, do you have the team to execute on the idea? Do you have a team to navigate what's going on in the world? Like right now we're seeing tariff uncertainty, right?
Yeah.
So that's something to look at, right? I think this even proves out that we are now we're still right place, right time, because we invest in a lot of US based companies. So anyways, getting back to venture capital, we come in pre-seed level, all the way up to Series A. So Series A, you're really starting to hit that inflection point. You're really starting to grow. You figured out your product market fit. And so that's what we look at. We look at those companies, but again, it comes down to the founding team, I would say primarily for us, because we're banking on you to win. And then secondarily, if you get into like the later stages, so we have right now we're on our later stage fund. So it's our fifth fund and it's focused on Series B to pre-IPO companies. So what that means is, again, they're really in their growth stage. They're hitting contracts. They're getting, whether it's commercial or for us, like we invest in dual use technology. So dual use implies that the company has a customer on both the commercial and the military government side.
Okay.
So they're hitting those big contracts. They're competing with like your Anduril and your Booz Allen and all of them. And at that point, with this current fund, it is specific to, as I mentioned, later stage, but also we're investing in 70% of our own portfolio companies because, again, it goes back to that. We already know the management team. We're probably on the board, or we have some insight as to what's happening within the company. And so for us, that's our current investment thesis, is we're investing in about 70% of our current portfolio companies. So we're picking our winners. If you think of like a wine reserve, a special wine reserve, like we are picking the best of the best. And as I mentioned, that 70%, so there's still that 30% net new deals, means that we can go out and we can either look for companies that fit specific industries. Like right now, we're actually leaning more into space, and that's new for us. And so maybe one or two companies that we look at are obviously they're going to be net new deals, but they would be in like the space industry. So venture capital is just a way to fund your company. It's usually, like I said, it just depends on what fund you're looking at. Obviously, this is what I always caveat. I'm going to throw this out there. I always caveat to founders, make sure you talk to the right VC that invests in the sector that you are in or the industry, because I have too many people LinkedIn message me and they're like, hey, you're an investor, will you invest in this? And I'm like, you didn't even look at
give me money.
Right. Just because we have money doesn't mean we give everyone money. So make sure if you're listening to this and you're interested in venture capital, make sure that you understand their investment thesis.
I love that, man. There's a ton to unpack there. So I want to start. So from like the VC side, when we're talking about especially like early, like pre-seed rounds and those kind of things, when you're looking at like the founding, like the founders or the founding team, what like qualities or attributes are you looking for that you believe will lead to success, or is there like a certain like data that they need to have already to make you believe that it's a good investment for you guys?
Yeah, good question. I would say again, it depends on the person. So for me, for example, like when I'm looking at the founding team, as you know, like there's sometimes solo founders, like I was a solo founder. Don't necessarily recommend it. I mean, that was my first startup. So I was looking at that time for a co-founder, but I hadn't gotten to that point yet. So because I worked, so backing up, so for context, when I was a founder, I was working again on my coffee pass for 3 years, working 14-hour days, 365 holidays, you name it. I worked around the clock all the time because I was the CMO, the COO, the CFO, the CEO, you name it.
All the C's.
And it's a lot. Like when they say like the founder's journey is very hard, it's really hard because it's constant like this. And so what I look at now, having that perspective of when I was a founder, is I want to see strengths, right? And I want to see that the other founder complements the weaknesses of the other founder. So for example, so what I like to see, I don't like to see a whole technical team, because to me, very technical people honestly kind of get in their own way sometimes. This is just what I found. It doesn't mean that they don't make good CEOs. That's not what I'm saying. I'm just saying like you need people on your team that are better in other areas than you are. So yes, you need your technical person. Yes, you need your person that's more like business. I would say even big thinker. Like when I think of, and when I did some digging on like why successful founders became successful, like look at your Steve Jobs, your Mark Zuckerberg, your Jeff Bezos, like they were big thinkers, right? And so you need a big thinker, but then you also need someone on your team that kind of reels you in, right? So I would say it's looking for a diverse team. And also when I say team, it doesn't have to be co-founders necessarily. It's like also who's on your board, like who are your mentors? Like I always ask companies, I want a list of your mentors, because for me, for example, I had about 30 mentors that I relied on all of the time. So at 2 a.m, I knew I had one mentor that if I had a question about something, he would get back to me right then and there because he was a founder himself. So diversity on your team, and also expertise, right? Like obviously you want people who have some sort of like background and knowledge in the industry that you're going into. But yeah, that's what I would go with. I
love that. I think that's critical, whether you're looking for, capital of any kind, angel, VC, or whatever else, or not. Because I feel like, I don't know what your experience has been, but in like my coaching practice, I've met a lot of entrepreneurs and salespeople too that they just don't, like, they're not thinking big enough, right? Like they're just thinking like, oh, I'm trying to make quota, or I'm trying to keep the lights on, or things like that, which are like, they're important, right? Those are important things too. But you
Right.
need to like, vision out a little bit. You need to kick yourself out into like 5 or 10 years from now. It's like, where are we really going? Where are we really trying to get to? And then worry
Correct.
about the how later. Like I said, like people just don't, they're just not thinking big enough. Um,
Agreed. I would add to that too.
yeah.
What came to mind was having a growth mindset. Like I'm obsessed with
Mm,
people who have a growth mindset because
yes.
for me, like I know that I will never know everything, and that is
Mm,
beautiful, right? There's
yep.
always something to learn from either someone beside me or like me doing my own work. But I really look for founders, and I would say like in the VC space now that I've been in it for a little bit, the one off-putting thing is when a founder thinks that they know everything. To me, I'm like
Yes.
instant no, right? Like I want to know that you don't know everything, and that actually impresses me more.
Yes, I love. Well, I mean, that's true in general. I mean, like
Right.
you're not gonna always, like you said, you're not gonna always know everything. You're like,
Mm-mm.
that's the whole like founding thing, right? Like you're doing all of the things all the time, and then you're pivoting super hard, super quickly, figuring out,
Yep.
oh, well, trying, this marketing campaign or whatever it was didn't work at
Yep.
all. So we got to shift. We got to shift a little bit.
Good. Exactly.
Did something else on the kind of on the other side here. You kind of mentioned it earlier. Is like you said, you get inundated with like a million messages on LinkedIn saying, "Hey, invest in my company. I'm making, I'm making a new tractor or whatever it is. Like not tech stuff at all, right?"
Yeah.
So beyond like just making sure that any investor of any kind that you're approaching for a potential investment is in your space, are there
Yeah.
other like key factors or attributes that you would suggest the founders look for in potential capital partners?
Yeah, I would say, so going back to my founder days,
Mm-hmm.
there's also something called bad capital. So meaning that this is like a marriage, and I cannot stress this enough, and I'm sure you guys
Yes.
have heard this a billion
Mm-hmm.
times, but it is a marriage, right? So when you are when you're getting to know the investor, make sure, do I like this person,
Mm-hmm.
right? Do they have integrity? Do they do what they say they're going to do? Because and also write everything down. Like make sure everything is in writing because
Yeah.
people have the best of intentions, but then life happens, and
Mm-hmm.
so sometimes promises are not fulfilled, and that happened to me as a founder. Um, and so I won't get into too many details about that, but I took essentially first money given to me versus going and talking to a lot of people and then deciding. So I would suggest doing that as well. And then again, make sure you like the people that are investing in you, right? It is a partnership. You guys are going to talk on a a, a regular like regimented time. Like you're
Yeah.
going to talk regularly, so make sure you like them. It's
Yeah.
important,
Man, again, that's true if you're talking to VC angel investors or
right?
just some guy on the street. Like, I mean, I talk to entrepreneurs all the time about this. It's like, yes, you're trying to keep the lights on, right? But eventually, you need to hit the point where like not every dollar is going to be a good dollar. You don't want just every
Exactly.
like anybody that walks through the door. You don't always want to be able to do like you can do business with them, but you own
Yeah,
like really what you want is you want to identify your audience, right? Like who are the people that you
exactly.
actually want to work with. And so
Yeah.
many people, I don't know why, I guess maybe fear or scarcity, I'm not sure what yet, but so many people just don't. They just are like, any dollar is a good dollar. I'll take whatever kind of money I can find, but really you need to find the people that you do your best
Hmm.
work with. So many people they get past that, I think.
Agreed. I would say fear and scarcity is a huge part of it. And this is, I
Mm,
mean, we run into, right? So we have to fundraise. Like I am fundraising on this side of it. So, and I have to remind founders of that as like, the fundraising is not done. Like we as VCs have to raise funds to be able to invest in your company, right?
yep.
But also with being on this side of fundraising and on the founder side is, we are energy. Everything is energy. So if you
Mm,
have this like scarcity mindset and you are like tight, found or investors can feel that. So
yes.
I would just say I'd be I would say and advise be mindful of that. Like, are you coming from a place of scarcity or are you coming from a place of abundance? And if you have a scarcity mindset, which it's hard as a founder because you are literally scraping by, like again, I've been there, but what transformed it for me was honestly when I switched my mindset to an abundance mindset. And then there's just so many doors open up.
Yes.
So yeah.
I 100% agree with you. And like, again, I mean, I feel like we're going to say this quite a bit today. We already have, but like, I mean, that's a principle that's true in VC, but also just true in life in general. Like when you are
Correct.
desperate in
Mm-hmm.
any way, if you are desperate for whatever the thing is, like, dating or money or
Yeah,
whatever it is,
all of it.
people can feel that, even if they aren't necessarily being able to like, hey, this guy was desperate. If they can't articulate it, they still feel that to some degree, and they're like, ooh, this isn't really what I want to be doing. So again, come from abundance as much as you possibly can, and know that, like you said, be picky. Like you said before, like go and talk to a handful of different venture capitalists or whatever it is you're talking to. Try out a few and see what works or what could work together. I love it. I love it.
The last thing I'd add to that too is ask for advice versus asking for something. So I don't mind helping people. Obviously, I'm connected to a bunch of different investors investing in a bunch of different industries. Like that is my job, is to know, and I'm very connected. And so like when people come to me, I don't mind helping them if they're like, inquisitive and like have that growth mindset. I love helping those people. It's like, who can I connect you to? Especially someone who's very passionate about what they're doing.
Yes.
But again, what is a huge turnoff to me is when someone comes to me and kind of has this expectation of like, hey, you're going to introduce me to people, or you're going to invest in my company. And it's like, the entitlement, right? Versus like, hey, what do you think about this? Or like, hey, can I send you over this? And like, what are your thoughts? Like if you have some time, and also being like mindful. I mean, as an investor, as a founder, I was super busy, but also as an investor, I'm extremely busy. And so sometimes like, I will say the people who continue to like reach out, and again, not in a pushy way, but in like a, hey, Katie, like, how are you? At one point you said that you would make this intro for me. Like sometimes it slips my mind because I have a billion other things going on. And then I'll be like, oh, hey, like I'll make that for you. But what I was going to say is just don't discredit other investors. But again, don't go straight to them and be like, if they're not investing in the industry in which you are playing in, don't expect them to invest, but maybe they have a connection for you.
Yes. Well, I think that applies everywhere. Like, again, I think that comes back to the abundance piece, like we mentioned a little bit ago. Like, if you were coming from abundance saying, hey, Katie, like, I don't know if this makes sense or not, but, I would love to chat about it, or I'm thinking about the thing that bugs me about networking stuff is when somebody messages me, which, again, I love to help people too. I want to uplift people, encourage them. But when somebody just says, hey, can I pick your brain? Like, no, like what, like about what? Like, why?
Also, time is valuable.
Yeah. Why do I need to spend 20 minutes? Yeah. Why do I need to spend 20 minutes talking to you so you can pick my brain? Like, if you have like a specific question, maybe we can talk about that, but that's a peeve of mine. I'm sure you probably get inundated with that kind of stuff too. I was really curious.
Relationship.
Yes, exactly. But I was really curious because I feel like we've kind of touched on this a little bit already, but you said you love coffee, right? Obviously you are working with a ton of smaller coffee shops, all of those kind of things in Austin. But what do you think that big brands, like some of the ones you mentioned earlier, what do you think like those big brands are missing that the small local shops get right?
Oh, that's a good question. What are they missing? I think, honestly, I think about this more and more. Quality has gone down. And, I'm just going to say it, for example, like Lululemon, they care. And I'm a capitalist. Like, I love making money, but I'm also a conscious capitalist. Like, let me frame that. Like, I like making money, but it has to benefit everyone, right? Like, we all win. Like, I live in that space. So I might think about it a little bit differently. But Lululemon, for example, and I've called out the CEO on this on LinkedIn a couple of times because all he cares about is the shareholders, which I get it. Again, you have to care about your shareholders, but making a good product, a long-lasting product, is also part of it. And I think we've kind of lost that over, I would say.
Yeah.
I mean, the McDonald's toy I was telling you about, right? Like, it was a legit McDonald's toy, and now it's like crap. Like, the same thing with like the refrigerators and the washing machines, right? Like, the quality has just gone down. And to me, the smaller coffee, or like smaller businesses in general, like, they care mostly about quality, right? Because they have to care about the quality in order to have the customers continually come back. And so I think that's what it all comes down. I think is we're getting away from quality, or the bigger businesses are getting away from quality. And that's where the smaller businesses are doing it better.
I love that. I honestly totally agree with you. I mean, I don't have like I said, I don't have the experience with Lululemon necessarily, but like I've had experiences in the sales world, especially where, like you said, the shareholders are really kind of king. Like, it's all about making sure that they're, I don't know what it is, like, make sure they're not just like complaining all the time or upset about whatever, we lost 2% or whatever the thing was. I'm really curious, if you don't mind indulging me a little bit. I had this kind of a discussion with people before. is like personally for me, I think like as business people and entrepreneurs and business owners and things, we kind of have to, I feel like we have to like have a good balance between like focusing on our employees, making sure that they're doing okay, and focusing on our customers, right? And for me personally, I think our first focus should be on our employees and then on our customers. What's your opinion on that?
Yeah, it's a tough one. It's a twofold, right?
Yep.
But I agree. Your team is everything. If you don't have a team, I mean, zero, like 100% of zero is still zero, right?
Right.
So
Yep. Yes.
I think it is super important. And I mean, I've been around the block a time or two where I wasn't valued on teams. And for me, it wasn't easy, especially with our generation now and like
Yeah.
Gen Z. We care more about being around people where we're valued, being in areas where we're valued versus, just grinding it out and being miserable. So
Hmm.
I think especially with where we are with our generations, team is very important first, and then your team takes care of your customer. So it's a win-win-win for everyone
Yes.
when you take care of your team first.
Yeah. I mean, a rising tide floats all boats, right?
Correct.
I'm a big believer in that.
Yeah.
Do you feel like there are any like kind of harder lessons you've learned, in your, long history of entrepreneurship and various roles? Are there any like really hard-earned lessons that you feel like have influenced how you do things now, or something that you carry forward in your role now?
I've learned a lot. It's interesting with this whole tariff situation.
Mm,
So we're looking at a couple of companies. We're doing some due diligence on a couple of our companies. And again, I'm more on the fundraising side, but I have a team of people under me that I kind of advise and make sure that we're asking the right questions because they're kind
mm,
of newer. So there's a lot for them to learn, right? Like
right.
you have your standard questions when doing due diligence on companies, but to me, it's like, how do we think deeper and like get more under the hood?
Mm,
So for example, with this tariff situation, there's a lot of uncertainty. And when I mean uncertainty, right, like we have no idea what's going to happen or like what's happening with the markets,
yeah.
no matter what you're investing in.
Hmm.
So my job is to make sure that I'm in the know and talking to even our LPs about, what it is that they're afraid of and what they think is going to happen and how they're managing their clients' money. So when I say our potential LPs, remember RIAs, so registered investment agents, so people who manage wealthy people's money.
Hmm.
So when talking to them and going back to the companies, so we did some due diligence on some companies. One of them has a client or a customer, and for their 2026 projected revenue,
Hmm.
like 90% of their revenue was going to be coming from Rolls-Royce. So as we know, Rolls-Royce is not a US based
Yep.
company.
Yep.
And one of the things my team didn't think about is like, how is that going to affect that contract? Because that is a projected, um,
Yep.
like even though the contract's in place, I mean, Rolls-Royce has a ton of money. They could easily, if they wanted to, be like, we want out of the contract, and they have the funds to do it versus a
Hmm.
startup. It's a startup. So they're not going to have the funds to go to litigation with Rolls-Royce over a contract. You know what I
Right.
mean? So thinking about that, and the only not, I wouldn't say the only reason, but because my startup was heavily affected. I mean, when I say heavily, COVID crushed it.
Hmm.
COVID crushed my company when I'm real about it. And so that was like the biggest lesson, or not the biggest, but it's one of the big lessons that I've learned is like you just have no idea what is over the horizon. And so making sure that one, relationships are everything. So cultivating relationships with a bunch of different people, I highly recommend, so that they can help you navigate certain issues, but also help you be aware of maybe potential issues that are over the horizon.
Hmm.
But just thinking about things differently like that. And again, my founder experience from no one could have predicted that COVID was going to happen and then it affecting my startup. And then again with this tariff uncertainty, right? Like, what does that mean for um, anyone who's manufacturing outside of the United States? So, anyways, just keeping that in mind. But that's more fresh, obviously, as you can
Right.
tell.
Right.
But there's a lot. I mean, man, I could give you a whole list of stuff.
Right. Well, Katie, thank you
Yeah.
so much. I mean, I love that. That's really been fantastic. As we kind of
Yeah.
wind down our episode today, I mean, what's kind of on the horizon for you? What's 2025 looking like? What's kind of the big goals you got?
Whew, yeah, so we're fundraising for Stony Lonesome Group. Like I said, I love what we do because we're really making an impact in national security. It's literally
Mm,
right time, right place. So that's a goal of mine. I'm gonna go to Peru. Personal side note, I'm gonna go to
love it.
Peru. Yeah, I need a vacation, and
Yep.
Machu Picchu is calling me. So
Enjoy it.
um, yeah, and then I would say lastly is digital athlete. It's kind of teaser. It's in the crypto digital asset space, and
Okay.
so obviously very different from Stony Lonesome Group, but that's what I love is I get to do all these different things, and yeah, so those three things I'm really excited about. And yeah,
I love it. I love it so much. Well, Katie, thank you again for coming on the show today. This has been
yeah,
absolutely
thanks for having me.
fantastic. Where can people, connect with you if they want to connect?
Yeah, I would say LinkedIn is the best
Mm,
spot. So if you are listening to this episode and you want to connect, send me a message and let me know that you listen to Jacob Hicks's podcast, and I will gladly accept your friend request because I've gotten to the point where I don't accept everyone's, but if I know where we're connecting, I'll connect with you.
I love it. Well, I'll make sure to put the link to your LinkedIn in the show notes so people can
Yeah,
find you. Make sure to put
perfect.
that message in there, put my name in there.
Yes,
Otherwise, you might get lost in sauce
exactly.
here. But Katie, thank you again. This has been absolutely fantastic. Thank you.
Yeah, yeah. Thanks for having me. It's been a
All right,
pleasure.
anybody listening, make sure to like, follow, and subscribe, and we'll see you guys next time.